Is World War III canceled? Last weekend, we saw the US directly attack Iran, hitting 3 of Iran's nuclear facilities, and people were scared. People were talking about how World War III just started. People were talking about how the stock market was going to crash this week. However, when this week came around, we saw the stock market up, we saw gold and oil down, and we also saw the announcement of a ceasefire between Israel and Iran. So we saw a much different turn of events than what most people were expecting. In this video, we're going to get into this sequence of events. We're going to talk about why assets reacted the way they did, and we're going to talk about what's next for the markets. Before we do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. Let's talk about the sequence of events here. A couple of weeks ago, we saw Israel directly attack Iran, hitting some of Iran's nuclear facilities. And then on June 21st, we saw the US do the same thing, except to a greater extent. And this was a very big deal. This was the United States getting directly involved in this war, which is something we typically don't see, right? We typically see the US acting indirectly in these conflicts, supplying their allies like Israel with weapons or resources, but the US decided to get directly involved, and that is a big and powerful move. They attacked 3 of Iran's nuclear facilities. Those facilities were Natanz, Fordo, and Isfahan. And the goal here for the US was to destroy Iran's nuclear enrichment capacity. Iran has been getting closer to developing a powerful nuclear weapon, and that's something that the US doesn't want. That's something that a lot of countries, especially in the Middle East, don't want. So I guess the US felt justified to make this move. It is a very serious move that could have implications. So I'm hoping that the US felt like they didn't have other options here. I don't really know all the details of Iran's nuclear program, right? And their what's going on there. But I'm guessing that for the US to make a big move like this, they felt like it was one of their only options. And so far, it seems like the outcome has been mostly good. We got this announcement of a ceasefire this week between Israel and Iran. Now, the question is, will this ceasefire hold? On June 23rd, we saw the ceasefire announced by President Trump. And after some small minor violations around the announcement, it looks like this ceasefire is held for the most part. Now, will it continue to hold? I would say that maybe it will in the short term, but long term, I think that it is unlikely. These two countries have deep ideological differences that go way back to 1979. And for these two countries to just stop fighting on a dime here, I would say that that's probably not going to happen. I hope that it happens, but I'm just trying to be realistic here. I don't think that it will. However, we did see the markets acting like the ceasefire is going to hold. We saw people moving into the stock market, moving into risk assets, moving out of gold, a safe haven asset. And we also saw oil come down a lot this week, which is not what people were expecting. People were expecting oil to head higher. After we saw the US attack Iran, we saw Iran threatening to retaliate by closing the Strait of Hormuz. We saw Iran's parliament approve this decision. Now, this is not something that has happened yet, and it might not be something that is going to happen with the ceasefire agreement. But if Iran were to close the Strait of Hormuz, that would have major implications for the world oil market. 20% of the world's oil travels through this route, and it would just potentially mean oil prices heading higher, right? This would be a big move by Iran, but it looks like this maybe isn't going to happen. Another thing that I thought about is who is the largest importer of oil from Iran? It's China. Approximately 90% of Iran's oil exports go to China. So in a way, this attack from the US was an indirect attack on China and China's economy, as they're somewhat reliant upon Iran for their energy. However, we didn't really see a retaliation from China as far as I can see, or we haven't really seen China get too involved since this attack by the US. And like I said, it seems like things are kind of cooling off with this ceasefire for now, but we're definitely going to be keeping our eye on this over the next couple of weeks. And I would not be surprised at all if we see things continue to escalate. As I mentioned, the markets were not buying this World War III narrative this week. We saw the stock market perform pretty good. The stock market was up, and of course that has to do with the ceasefire agreement. With tensions easing in the Middle East, potentially, that is going to be good for risk assets, right? That's going to be good for business if we do see this conflict die down a bit. I also think there's some other things happening here. The other thing we can look at with the stock market is these tariffs, right? We saw these tariffs announced in early April, and the stock market took a huge dip. Let's go ahead and take a look at a chart of the S&P 500 over the past 5 years. As you can see, in 2025, in April, we saw the stock market nosedive. So I think right now, with the easing of these tariffs, with them looking like they're not going to be as intense, with these conflicts potentially easing a bit, the stock market is just recovering from that big dip and getting back to where it was. We can also think about the fact that liquidity is coming, and the markets have learned this. They know that the dollar supply is going to continue to increase. We have a ton of debt that needs to be refinanced here in the US this year. And I think we're going to definitely see some quantitative easing in the back 6 months of this year. That's going to send asset prices higher in dollar terms. So I think that people realize that the place you don't want to be is the dollar, and stocks are probably going to go up in dollar terms as the dollar just continues to depreciate and we see the supply go higher. Now, how will the stock market perform in real terms? I don't think it's going to perform as well as some other assets, but people sometimes don't focus on that, right? If we take a look at another chart here, this shows gold's performance over the past week. And as you can see, gold is down. And this makes sense, right? With this ceasefire agreement, with tensions easing, people are shifting out of gold, a safe haven asset, and into stocks. Now, if we do see this conflict continue to escalate here, maybe the ceasefire doesn't hold, I would expect people to maybe shift back into gold. And with the dollar continuing to depreciate, if we also see tension out there, if we see these conflicts escalating, maybe if we see these tariffs get more intense again, then gold may be an attractive place for people to go. If we look at another chart, this shows crude oil's performance over the past week. And I think this was the most unexpected chart of the week. After we got the news of the US attacking Iran, I think that most people were expecting oil to head higher this week. And we also saw that news about the Strait of Hormuz and that potentially closing. So with that, I think there was an expectation that oil was going to rise and that was going to be bad for the stock market. We saw the exact opposite. Crude oil tanked. And that's just showing you that the markets really aren't buying this whole World War III narrative. What are my main takeaways from this whole conflict and these events that we've seen? My main takeaway is that the markets understand that the worst place to be is in the dollar, and the markets understand that liquidity is coming. And with that, I really expect most assets to head higher in dollar terms. And I really think that people need to stop measuring in the dollar. Just because your stock portfolio goes up in dollars a little bit doesn't mean you're winning in real terms. If your stock portfolio goes up a little bit, but the price of your groceries and the price of the other things you need, your rent goes up higher, you are losing in real terms. So I really think that we need to stop thinking of measuring, our investing performance in dollars, because it's very misleading. And we have been in this environment over the past couple of years where liquidity hasn't even really been rising. And now with the the government needing to refinance all this national debt, we are going to see liquidity rise. And I am just eager to see what this is going to mean for these assets. I think it's going to be great for Bitcoin, which is a liquidity sponge, and Bitcoin is kind of the best of both worlds because it is this uncorrelated safe haven asset, but you could also look at it as a risk asset, right? When markets are going good, when we're seeing liquidity rise, I think that people tend to lean towards Bitcoin as well. When we see liquidity rise, it makes sense to me that we'll see stocks head higher. Now, we definitely got to keep our eyes on these tariffs and these conflicts. We are not out of the water yet in the Middle East. It's only been a couple of days since the ceasefire agreement, and it looks like we have some of these tariffs that are going to be taking effect pretty soon here. So personally, I wouldn't be feeling too great in the stock market, but I just expect that with the dollar going down, we're going to see stocks probably go up in real terms, but I really do not know. The thing about gold is, yes, gold is a safe haven asset. Yes, that with the dollar going down, I expect gold to go up. However, when we look at gold with a market cap above $20 trillion, and the fact that gold is a direct competitor with Bitcoin, and I look at Bitcoin, which I think is a better safe haven asset, a better store of value, around a $2 trillion market cap, at some point here, Bitcoin is really going to start eating into gold. And when we look at the rally that gold has gone on, I just think that I'd rather bet on Bitcoin. I think that Bitcoin has a lot more upside. I think that eventually we see people selling off their gold for Bitcoin. I don't know when that's going to happen. Maybe in the next couple of years, we see people buying into both of these assets. But with the run that gold has gone on, I feel like you kind of missed the run. Gold has gone up almost $2,000 over the past couple of years. So who knows? We could see people selling out of their gold position and into Bitcoin or stocks coming up here with liquidity rising. The worst place to be is in the dollar, and I think that the markets have really come to realize that. That's going to wrap it up for this one. I hope that this ceasefire holds and that these two countries here in the Middle East can really resolve their differences, but we will just have to see. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.